All across the country, 2010 was a much better year for the apartment sector than was 2009. And case in point, Portland. What a difference a year makes. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Portland update. In the second half of 2009, Portland's apartment market hit rock bottom. Occupancy was at its lowest point in a number of years, and rental rates were down more than 6% annually. And at the time, there was just way too much new supply in the market, especially that high-end luxury, should-have-been condo variety. But starting at the beginning of 2010, things got better and very fast. Let's start with occupancy. Overall occupancy fell below 93% in the second half of 2009, and then look at what happened in 2010. Occupancy jumped way up in 1Q and continued improving for most of the year, up 2.8 points annually and back up into strong shape at 95.7%, good enough for 10th place nationally in a tie with San Francisco. Now that's still below pre-recession levels, but you really couldn't ask for much more in one 12-month period. And let's talk a little about rental rates. After 5 straight quarters of rent cuts, rates began surging in early 2010 and kept going up as well. By year-end, same-store rates jumped 4.9%, Portland's best annual performance in almost 3 years. Portland had the 9th biggest increase in the nation in 2010 and the 3rd biggest in the West region, behind only San Jose and Ventura. And, by the way, well ahead of nearby Seattle, where rents were up 3.4%. They had strong improvement in both occupancy and rents, but couldn't keep pace with Portland. So, combining those gains in occupancy and rents, we have revenue growth of 7.7% in Portland. Very strong. In fact, only 4 metros anywhere in the country did better: El Paso, New York, Nashville, and San Jose. And by comparison, the U.S. average was only 4%. So again, Portland did very well on the revenue front in 2010. Now, digging a little deeper in the data, we see very strong gains in both occupancy and rents in all product age categories and all submarkets as well. And one that really stood out was the West Portland Beaverton area. Occupancy there was up 2.5 points annually, up to a rate of 96.1%, and same-store rental rates were up significantly, up 6%, the best of all submarkets in Portland, but it was a close race. The only submarket that didn't post rent growth of at least 5% was the urban core, central Portland area, where there's just a lot of new supply working through initial lease-up over the past couple of years. But even there, rents were up significantly, up 2.7%, so even that is better than the U.S. average. So that wraps us up for Portland. Until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.